Right, welcome everybody. I think we've still got people joining, so we're going to just wait a few more moments. We've got 99 people on. We've just hit 100, so I think that's probably a good start. Thank you very much. We are in my living room in Essex. It's not sunny, but it's okay. I'd like to start by saying that I am grateful to the MGAA for permitting us to present the FCA plan to you today. I want to just cover off what we're going to do. I'm going to do a bit of a quick welcome. Then we're going to look at last year's plan. The reason for that is that this is the shortest plan in my memory, at least. But the issue with the plan is that you can't really understand this plan without understanding the background to the plan. So we're going to start with last year's plan, then we're going to look at some hints that came along in February, and then we will move to this year's plan. We'll have a quick look at what you probably should be doing now, and then at the request of a client, I'm going to look at what the FCA's response so far has been to COVID-19. So with all of that, I think we're going to start. So welcome everybody and guests. Who am I? I'm Kenneth Underhill. I'm the director of ICSR, which is a consulting firm for the insurance market. We cover risk, compliance, corporate governance, operations, IT, complaints, claims, and a variety of other areas. Some housekeeping. Firstly, if you haven't got it on, you can achieve side-by-side mode, which would put me in a little corner somewhere of your screen and with the slides in front of you. Sound-wise, everybody is on mute except for me. All webcams are also turned off. Questions, if you do have questions, we have a chat going on. It's not on my screen because then I can't see my slides and I'm in a bit of trouble. But there is the ability to use the chat, and they will come back to me later on. We're going to have polls. All polls are anonymous. There are only going to be 3 questions, but they are relevant, but they will be anonymous. This is also being recorded, and it will be on the MGAA website and the ICSR website sometime shortly after we have finished. Finally, very importantly, for those who need CLE points, the learning objectives here are to obtain a clear understanding of the FCA plan and the actions needed to be taken to begin the planning, regulatory and compliance teams' activities, and to be ready for actions and information requests or any changes that may be implemented. Now finally, normally we have one of these, so I will make the point, there is no expected fire drill today. If my fire alarm goes off, I'll be leaving. If your fire alarm goes off, grab your spouse, grab your kids, the dog, and any guinea pigs or anything else, and please leave. Right, so let's get on with the serious part of the day. All right. Oh, what's happened here? Sorry about this. Right. Okay, so this is the last year's plan. We're looking at this because of background. It itself was a virtual continuation of a prior year plan. And the reason for that was that at the time we had Brexit, we had IDD, we had GDPR, we had SMCR, and there was an awful lot going on. So the FCA at that point in time decided that there was no need to add a great deal more to what was going on and what people should be dealing with. At that point, however, Brexit really dominated everything. And that's important because, as we'll see, Brexit may have been done, but we're in the transition period and there are questions arising at this point on Brexit. So culture and governance was a continuing issue last year. We will see again that it is a continuing issue. It will continue to morph as we move along, and we will look very closely at that because it plays a really big part in this year's plan. Operational resilience started. It was the beginning of the work that was required. We had some consultation papers coming out. People started to need to think about it. Financial crime, as far as I can recall, has been on every plan for the last 5 or more years. and so has fair treatment of customers. But in this particular case, what we were looking at was the fair treatment of existing customers. And that was all about the differential in pricing between what existing customers were paying and what new customers were paying. The outcome of that work was a feedback statement number 19 of 4 or 4 of 19, but that work has now been included in what is known as the General Insurance Pricing Practices Market Review. You'll see the FCA had some priorities, innovation, data, and data ethics were there. We didn't see a lot on that, although they were working in the background on it. They were doing their own diagnostics. Demographic change was important to them, and they had started to think about what the future of regulation looks like, and that'll also be something that comes up very importantly. The distribution chain review took place. We received the review 19 or 2 of 19 was issued on the 10th of April, so just over a year ago, and it was accompanied by a Dear CEO letter. Now, importantly, because in the MGA world, certainly, and generally in insurance distribution, this was about looking at the services that customers received. So it's fair treatment of customers, it's conduct risk, it's all of those sort of things. And what the review came out with, and the Dear CEO letter made clear, was that value and services in the chain must be looked at as a part of product governance. And the FCA made a few other very important declarations. They required all products to be compatible with the objectives. The distribution strategy was required to be compatible with the target market, and the distribution had to be consistent with the best interest rules, and that is going to keep coming back. I also just want to talk about the other ones. The GI value measures was reported in CP 19 of 8. It's not been completed, so that has also been rolled into the General Insurance Pricing Practices Market Review. Monitoring of claims inflation, so we did get some work there, but it's not completed. So that is all about what the impact of the Civil Liability Act is going to have on claims, and that is now going to be reported through into Q2 of this year, although that may also go over. Improving signposting and access to insurance. We had a policy statement 3 of 2020 on travel, which was issued in February. And it set out some specific requirements that firms are going to have to comply with. One of those was the signposting of specialists in travel insurance for those with specific needs. And there were additional requirements. Now, the signposting was to go live 30 days after a schedule of specialists had been produced. That's now been delayed. The other requirements under PS 20 of 3 of 20 are still due to be completed in November. So there was quite a lot of work last year, evaluating the outcomes of GI renewals, transparency that was issued. The outcome of that was, according to the FCA, that there was a benefit to customers in that renewal increases were not as high in previous years because of the additional transparency in the renewal framework. So what were the themes? Well, we know the themes on the specific work in general insurance was improved transparency, improved products, suitability for customers, and value for customers. Now, we're just going to go and ask you the first of the polls. Ben, if you could send that out to everybody. that would be great. Here it is. I'm going to give you a few minutes to have a look at that. Answer it, please. And then we'll move on to the next slide. Oh, interesting. Very interesting indeed. I'm going to give you 5 more seconds if you can all. 3, 2, 1. Okay, let's get rid of that if we can. I've got to get it off my screen because otherwise I can't see anything. Okay, cool. All right, thank you. Right. So, something's happening here. I'm not getting... Okay, I'm sorry about this. I don't know what's going on, but my laptop is not taking me to the next page. There we go. Okay, sorry about that. All right, so what have we got now? We're into February, this year, February, and what we've got is Chris Wallard becomes the CEO. So he issues a sector viewpoint in February of what he's thinking is going to be specific for the insurance sector going forward under his command. And it's really his first the first indication of his intentions. And what we see is we have pricing practices in personal lines. His view is, or the FCA's view is, that they're still penalising loyal customers. We had a report, we had an interim report. There was to be a full report due this month, or was it March? It might have been March. But it's now been pushed back to Q2 2020. And in actual fact, I think it was just a few days ago, the FCA website changed to say after June. So while we're talking here about that, it's now looking like it's going to be after June. We also had add-on prices continue to cause harm to consumers, piece of work that's been going on for a while. These first two are now rolled up into the General Insurance Pricing Practices Market Review and will be reviewed at the same time after June. Complex distribution chains and products are contributing to poor value. As I mentioned, we had the final guidance issued. That's 5 of 19. The real question here is going to be, what have firms done in response to that? And it's quite important because, I'll say it again later on, but this is going to play into what's going on in COVID-19 at the moment. There's lots of issues in this area, and I think this is going to be one of the biggest focuses that we will see. We have consumers with specific needs are facing barriers. Now, in this sector view, what we now see is that the focus has gone from the travel business. I've mentioned that earlier on. We had the travel piece that was going to be the highlighting of or the signposting to specialists. We're now going to see this roll into a much wider area of the GI area or GI insurance. Misuse of customer data can harm consumers, particularly vulnerable consumers. So this isn't entirely new, but it is a continuation of a piece that was in last year's plan. But there's no doubt that this is going to get much more focus going forward. So I wouldn't call it new, but it's definitely very much emerging into the forefront, and we'll see why shortly. But non-financial misconduct in the London market. Now, this is, according to the FCA, not just about behaviour. There's been plenty in the press about behaviour, but this is also about conflicts of interest. It's also about remuneration, and it's about diversity. So it's much wider than what everybody has read in the press. We're going to see some more focus on that. And then higher prices from inefficiencies in the London market. So this has a direct correlation to the work that's been done on distribution chains in the UK market more generally. And the FCA's view is that this is driven by inefficiencies. It's driven by the delay in taking on and using new technology. It's caused by the cost, the acquisition cost in the London market as well. So there's quite a lot of, we will see quite a lot more about this later on. So the themes, what are we seeing here in the way of themes? Well, what we're seeing are the drive for better products, a drive for better access, a drive for better value, and a drive for better culture. There's also still the continuing theme of customer vulnerabilities, what needs to be done there. And we're seeing much more about technology, data, and efficiency. So that was February, not that long ago. And then all of a sudden, we get this year's plan. And this, this is an interesting one. And there's a lot of reasons why it's interesting, but one of the most important ones is that this is it's sort of like Doctor Who and the TARDIS, because instead of being a one-year time frame or horizon, this plan is being spilled out as what we're going to look at for the next 3 years. And I guess COVID-19 has a big part in that. This isn't going to all happen overnight. A lot of this is going to be about looking back, looking at what happened and that sort of thing. The report itself, or the plan itself, talks about the need for a COVID-19 review. That's not just going to be business continuity. That's not just going to be about capital. It's not just going to be about cash flow or governance or risk or product governance. They will all be looked at. There have been issues in all of those that are now coming to the front in a very big way as a result of COVID-19. But customer service, I think, is going to be the one that people are really going to look at. And the FCA is going to be most interested in seeing how the market responded to customers' needs. So it goes back to that question of PROD. The other key piece about this plan, and this is where Chris Woolard and his team have really set out where they want to go. And this is back to that, what's going to happen, the future of regulation piece. And what this plan declares is that there is going to be a need for a change. And they want to move away from the current framework, which talks about process and rules and the approach to that. And then moving to something much more, something more like the way the FCA originally said it was going to be, which is about principles and about outcomes. And what they have said in this plan is that this focus on remediation and redress, there's too much time being spent on that, and there's not enough time being spent on actually the front end, which is the outcomes. When you're putting your products together, when you're distributing, what is it that you are supposed to be doing? They want you to look at the outcome for the customer. And this whole focus is changing to feeding the machine, your machine, the process of developing your products and the process of identifying how you're going to distribute them, feeding it with good food rather than food that's okay and may make a bit of a mess later. They want less mess, they want more up front. And I guess that, of course, as we all know, usually means more investment. So that's what they're asking for. They're saying that firms must make consumers' interests the foundation of the business model and, importantly, the behaviours of the business. So that's where all of this is heading, and as we'll see, the themes are still there. It's still consumers. It's still better products, etc., etc. We're going to go through that. So let's look now at what the FCA says it's going to do, how it will work and regulate. It wants a faster and more effective decision-making processes. I guess the process of doing reviews, doing thematic reviews, firm-specific reviews. It's going to want to be able to do its diagnostics faster. And some of that is going to be about using better technology. Some of it is just going to be, I think, more nimble. I mean, they want a real focus on customer outcomes. And I guess what what that means is that they're not going to be looking at whether or not you have complied with the rules, whether you have a process for product approval, right? Because, you know, if the end outcome of a process for approval of a product is that the product is approved, that doesn't necessarily mean that it's right for customers. And I think that's one of the things that's going to play importantly through this. It is that process actually looking at it from the point of view of the customer, or is it saying this is the product, and then through the process there are some changes, some bits and pieces and changes here and there. Does that still mean that the product may not be right for the customer? They're also going to be more focused and more coordinated. And I think that's the piece that I was talking about when it comes to technology. We can expect them to use AI going forward. We can expect them to find ways to adapt and to be more nimble. And they want to be more influential internationally. So that's about enabling effective, and they're going to be looking at enabling effective consumer investment decisions. Now that piece of the plan is all about investments. But as we know, when you look at what the FCA is doing in other markets outside of the insurance market, it's often a test, it's a first start. And they will look at whether or not that what they do in the investment world can be operated within the insurance world. And I expect that whatever they do there, and we need to keep an eye on this, may turn up in the insurance world in another year or two. Again, ensuring consumer credit markets work well. It's only here, it's not relevant to insurance, but it is important because what they do there, it will have an impact on maybe premium credit, for example. But also it ultimately will play out into the insurance world. Making payments safe and accessible. There's an awful lot of work about how new firms who are offering payment processes operate. We can expect, and it's already been talked about in the InsurTech world, the new methods of making payments in insurance, and we can expect that to play through. Can firms pay their consumers' claims using, you know, any, I don't know, Apple Pay or something like that? Are those things that are going to be available to them? And then right in the middle of our space is developing fair value in a digital age. And this is a theme that, you know, we've seen coming and we've seen previously. It's all about suitability. It's all about value. It's all about technology, efficiency, and it's all about product governance. So those are their key priorities, and the biggest one there that is going to have the biggest impact on us is number 5. And then cross-cutting work. So we get Brexit. It's been there, it's still there. You know, we are past the Brexit date, we're out, we're just through a transformation. We've got climate change risk. It's one of the new risks. And it's, you know, we're going to see more and more work on that. Innovation and technology, that's been mentioned before, but now it's really going to pull in to what we're doing. Operational resilience, we had started work on that. There's a lot more coming on operational resilience. Financial crime. So financial crime is something that, as I said earlier, has been in every plan I have ever seen. It's not going to go away. It's increasing. We know, anybody who's seen, you know, the news has noticed that, you know, financial crime is increasing at this point in time. Customers are being targeted by people in a variety of different ways, and the FCA is going to do its best to stop that. Culture. Culture is key. And the reason culture is key is because what I said earlier about the plan, this is no longer going to be about complying with rules and process. This is now moving to behaviours and the culture within firms. It's a real paradigm shift. You know, if you think historically we had TCF, then we moved into conduct risk, and now you don't see TCF anywhere in the FCA's announcements, documents, etc. Occasionally you might see a mention of the 6 outcomes, but they're not really it's not focused on that anymore. It's focused on culture, and it's focused on embedding culture and the behaviors of firms. So on the sector work, again, we're back in those areas that we talked about. These are continuing what was being done last year. It's all, you can see it there, it's high quality, it's fair value, it's products which are suitable for the needs of the customers, and products which deliver on promises which are made. Also, customers not being unfairly excluded. So these same themes, they are better products, better access, better value, customer vulnerabilities, efficiency, technology, culture and behavior. And why? Why are we moving in that direction? Well, I want to give you an example, and I want to talk about that. So during COVID-19, for my own firm, I thought, what happens if I get it? What happens if, you know, I find that I won't find I'm not around, but my family does, the firm does. ICSR suddenly doesn't have one of its directors. What happens? So I started looking at Keyman Insurance, which most of you will know is an insurance which pays a firm for the loss of or the illness of a keyman. And I found something online where they were offering $250,000 in cover for what was, I think the premium started at £3.50. Right, so I filled in the form and it said, I then got an email saying, thank you very much for that information. Somebody will call you shortly. So somebody did call me, and they ran through some information. Am I unwell? What's my medical history? What sports do I play? All the usual sort of things. And he said, right, thank you very much. We will send you, a quote. And he said, this is a great product because there's only one exclusion. And the only exclusion that this product has is in the event of suicide, of death by intentional self-injury. Anyway, so I thought, okay, that's great. So I got a quote, and it had a couple of quotes, it had a couple of variations, and it had a policy summary with it. Now that policy summary, I thought, okay, I'll have a look at this. He told me that there was only one exclusion. So I opened the policy summary, and it wasn't easy to read, but I figured, I went through it and I found 15 exclusions. I thought, okay. Now, the problem with the policy summary was it wasn't very clear on some of those exclusions. So I went back to him and said, look, you told me there was only one exclusion. Here are a whole heap of other exclusions, including that actually my firm gets no benefit for the first 2 years. So I have to pay 2 years of premiums, and only if I die after that does my firm get a payment. Okay, so I said, look, I don't quite understand some of these. You've mentioned cancer. My family has a history of cancer, so I'm going to have a look. I asked them to send me a copy of the policy. The policy arrived. It's from one of the very large UK insurers, and I went through it. And I could not understand that policy. Now, I am a lawyer of 25 years in the insurance market. I've seen an awful lot of policies in my time. It was very hard to read. So I've gone from a situation where I'm told that and the quote that I received was £35, not £3.50 a month. So I've gone from, this only has one exclusion, it should only cost you £3.50 a month, to here is terms and conditions for a policy which is £35 a month. I can't claim on it or the firm can't claim on it for 2 years, and there is a raft of exclusions. It was very difficult to understand and to read. That product will have gone through somebody's product governance process. And this is what we are facing right now with COVID-19. There are people out there who genuinely will have believed that they had cover for BI. And those products will have gone through, product approval processes. Were they right for the customer? Were they not? And that's why we're seeing this focus now on outcomes. it's because you could have had that product go through, but somehow, and I've seen a lot of the BI policies. I'm not giving advice anymore on legal, on legal issues relating to policy interpretation, but I was asked to look at them, and they are confusing, and that's the problem, right? That is the bit that the FCA really wants to deal with, and that's why we are going to see a continuing focus on customer outcomes, better products, better efficiency, customers who are vulnerable, and better value. And it just, that's where we are, and that's why this is coming. So what do we need to do now? Right, at the top of the list, you should review your current compliance plan. You should determine whether or not it remains current or requires updating. Then you should continue with any scheduled work. Brexit. So if you're not where you need to be with Brexit at the moment, it's probably too late. Culture. You've got to find a way to embed culture within your firm. It's got to be the foundation of the business model, and it must drive the behaviours. We are definitely going to keep coming back to culture. Governance. Governance has always been an issue for the FCA. They're going to continue with that. We can assume that the FCA is going to look at what went wrong as a part of their COVID review and look back. Financial crime. So financial crime is happening now. You need to continue to maintain your financial crime controls. You need to make sure that you are aware and alert to the possibility of increasing fraud, AML, and other things during this period, particularly as people are working remotely. It makes it more difficult, but you need to be on top of it. Distribution chains and value. Well, the FCA has issued one piece. There's going to be more coming. They've already told you what their expectations are in their interim report. They are going to be looking at what people have done and will be doing. Vulnerable customers, same thing. There is documentation out there now. They're moving from one part to a much wider part, particularly when it comes to access to products. Suitability of products. I've just explained why that is so important. We know all of these, distribution, vulnerable customers, access to products, suitability of products, they're all about customers, they're all about the products, they're about the value, they're about the quality of the product. And then we finally, operational resilience. That is a piece that is going to be large. It's been looming large for a very long time. The consultation papers are out there. The original focus on operational resilience was primarily around IT. It was around the ability to continue to provide a service to customers if there were problems. It assumes that there will be problems. The question is how long that a failure of a service should continue in relation to an important service. We know and we can see ourselves that operational resilience is going to have some tweaks. They don't need to change the consultation papers because the consultation papers don't just talk about IT. It talks about the service to the customers, and they are going to look at what happened and is happening now, and they will focus operational resilience in a very wide way. They will want to know what lessons firms have learnt from what's going on at the moment. And the review. So the review is coming. They've said that it's going to come. People need to prepare for it. They need to start to think about what happened in their firm. Okay, so what was it? Where did governance go wrong, if it has gone wrong? How did you deal with any capital issues? How did you deal with cash flow issues? How did you deal with remote working, continuity of business, governance, risk, product governance? Were there product governance issues in relation to products that were distributed by you? Okay, so we're going to start now to look at poll number 2. The question will come up. Ben, please. There we go. This is purely, I think, about operational resilience. Interesting. Okay, I can see that as it comes up. I don't know if you can. I'm going to give 10 more seconds. All right, let's get rid of that, please. I think I've got to do that. Right, so if I could just stop, I'm going to move on to the FCA's response to COVID-19 now, but before I do, I just want to remind you that if you have questions, please get them up onto the messaging service because I'll deal with them at the end. And I know that I'm not dealing with any of these particular consultations or anything in detail. I think it's much more important that people look at the themes because the themes are the important thing. It's all about customer service at the moment. It's all about products. It's all about how you improve your products and you make sure that they meet the needs of the customers. So now, right, okay, so we're moving on to the FCA response to COVID-19. I want to start. The first thing that the FCA has said about this is that this is unprecedented, and I don't think anybody will doubt that. We know that just about everybody had a pandemic on their risk register. Not everybody did. Most did, but it was generally as an emerging risk. I don't think anybody really thought about how quickly it could emerge or the way it did. The FCA's response to COVID-19 has been driven by 3 priorities. The first of those is to ensure that the financial services markets support customers. The second is to ensure that the public is not scammed. So going back to the point I made about current financial crime requirements, it wants you to make sure that you are operating your financial crime controls properly. And the FCA want to ensure that firms understand what their expectations are of regulated firms. So the actions that they have said that they are going to take are to ensure that markets continue functioning, to provide guidance to regulated firms on government schemes. Can you use them? Can you not use them? What does it mean in terms of capital, etc.? To support consumers. They want to ensure that they, as a regulator, are supporting consumers. It's one of their objectives. They want to ensure that they can support, maintain rather, access to the banking. To banks and to cash for customers. And then they want to protect the most vulnerable. So those are the actions that they stated that they were going to take. And the first of their responses was on 17th of March. In this response, they issued an information for firms. The first thing they did was delay some consultation papers. So operational resilience has been delayed. It's now back to October, or is it November? Proposals to enhance climate-related disclosures by listed firms, now October. General insurance practices, pricing practices, market study is now beyond June. It was originally Q2. Add-on practices, Q2. I think that's likely to fall over as well till after Q2. Then you've got guidance of firms on the fair treatment of vulnerable customers. Again, it says Q2. I think on the website actually this morning it was saying after June as well. So it's helpful. It just means that you can down tool slightly on those at the moment, but you definitely shouldn't put them away and think that you don't have to worry about them. They are coming, and they're coming sooner than perhaps we would like. They also gave guidance that firms should be reviewing their contingency plans. Fairly obvious, I should think, because this is before lockdown. Firms are expected to take reasonable steps, and this is very important. They've given the guidance. Now they're saying, we want you to make sure that you continue to comply, right? Reasonable steps to meet your regulatory obligations and to protect customers and the market integrity. They also provided a bit of guidance about not requiring a single SMF. So you've got assistance in here, you've got guidance, and you've got that you've got to continue complying. That was their first response. Okay, 3 days later, out comes guidance on who key workers were. Because this is all about, keeping the market functioning. And here they said that for them, key workers in financial services were those that were necessary to provide essential daily financial services to consumers or to ensure the continued functioning of markets. They must consider overall management, your SIMPs, should they carry on. Ops and IT were required for the delivery of online services. And then individuals dealing with processing of claims and renewals should also be considered to be essential. It was only guidance, but it's good guidance. Risk management, compliance and auditing necessary to ensure firms meet customer needs. So this is what you have to do. You must keep the service going, and you must ensure that you have your controls in place to continue to ensure that you can comply with the FCA requirements. Okay, 26th of March. Further delays. These are again there in order to support firms, give them breathing space. Requirements for publishing audited financial statements, filing of accounts, audit tenders, reporting deadlines for public sector bodies, and FRC encouragement for firms around what to do in order to ensure that they continued good governance. And importantly, where firms were looking like they may not be as resilient as they could be financially, they were required to immediately notify the FCA. All right. 27th of March, there was a bit further guidance on what individuals could do in terms of whether they had to go to work or not. And the FCA comes out and says, IT and ops people can work at home. Financial advisors can give advice from home. So there was clearly something going on about whether or not essential workers had to actually be in the office, and we're now told that that's not the case. Importantly, on the 31st of March, there's a Dear CEO letter, another reminder you must comply. Here, this time, it's about KYC aspects of AML laws, anti-money laundering laws. There is crime going on, there's financial crime, there's an uptick in it. You guys have got to ensure that you have your controls operating. And helpfully, there was guidance on whether or not small firms could or could not use government loan schemes or other schemes to help them through the crisis. And the answer was, yes, you can use them. And if you do take loans, that's fine, but you won't be able to use it to support your capital requirements. So your minimum requirements. Okay. Then on the 3rd of April, we have joint regulated firms, a statement from the PRA and FCA, all about SMCR, all about what you have to do, what you haven't got to do. I think most of you are non-joint regulated, so I'm not going to go through these. If you are joint regulated, there they are. Importantly, the message is, yes, there will be some downplaying of some of the strictest SMCR requirements, but you must comply, and you have to ensure that people are doing their training and are fit and proper. You have to ensure there are SIMPs and there are people carrying on, and you must do your annual certification. So yes, there is a bit of relaxation, but compliance is required. 3rd of April, we then get the FCA for solar regulated firms. Same message, really. Okay, so you can have a bit of relaxation, and that is in terms of what you have to deliver to the FCA. You don't have to provide them with any changes to SORs. However, your internal documentation must be kept up to date. So if you have a SIMP who is ill and unable to operate in the role for 3-4 weeks, then you can have somebody who can replace them temporarily, and you don't need to notify the FCA, but you must make sure that your maps, your role profiles and your SOARs are kept up to date. All right, helpful, possibly not as helpful as some firms would have liked, but still I think quite helpful. Right, 15th of April, we get into the world of ensuring that customers are getting a service. There's guidance on what needs to be done in relation to policies. And here what you've got is the FCA saying, we accept that not everybody is covered by a BI. Okay? Not surprising. But where they are, where the policy is clear, they want claims paid, they want them assessed, and they want them paid quickly. And wherever possible, the FCA, and I like this, would like you to make interim payments. So that's important. And they also provide a helpful suggestion that where there are disputed claims, use the Ombudsman service for the prospect of a quicker decision. Now, a lot of firms may not want to do that because of the amount riding on a particular interpretation of a clause or a policy. But, you know, if you want to get through this process quickly, it's an option that's available. They've also established a small business unit for small business customers. We then had more recently an update on professional indemnity insurance for financial advisors and on continuing education. And the FCA is expecting all staff to complete their CLE. So it's, again, the message is you've got to comply. And finally, on the 28th of this month, there was an update on what returns must be filed and when, and there has been a delay to most of those. So those include returns on capital owned funds, on your risk returns, etc., etc. So again, there's assistance, there's guidance, there's requirements to keep the market functioning, and it's all about service to customers. So you know, the FCA is doing what it can to give guidance to firms, to make it clear that you're still expected to comply, and to think very carefully about how you service your customers. Right, last poll. This is it. It's the same question that we had at the beginning, but now, having heard what I've had to say, which of these items do you think is going to be the one that most people are going to need to focus on in the short term? After this, we will move to some questions. Right, interesting. Okay, I'm going to give it 10 more seconds. 5, 4, 3, 2, 1. Okay, that's it. Thank you very much. Right, now we're going to move to questions.
Hi Ken, it's Ben here.
Okay, Ben, hi.
So we've got a number of questions coming already. Would you like to see the results of the polling first?
Yes, let's have a look at the polls.
So I'm going to share the results of the first poll initially. These are the
answers
with
everybody?
people gave. I think everybody should be able to see it, yes.
Good. All right.
So hopefully you can see that.
31% said Brexit.
Would you like to see the results to poll 3 next?
Can you put it beside that one?
Regrettably, I don't think I can.
Okay, so don't do it just yet. I mean, interestingly, originally, Brexit was the leader by 7%. A little disconcerting for me because by now people should actually have their Brexit solution in place. If you haven't, and you might be a bit late, or maybe you're at the tail end of getting it there. But that's quite interesting. Culture was the second place, and I'm pleased to see that because I really think that that's probably definitely where we need to be. Third place and a tie between operational resilience and distribution chains and fair value. Yeah, okay. I think they're both coming down the pipeline at about the same speed or velocity, and probably going to have the same amount of impact. So that's a fair call. Financial crime, I think. Hang on. I think financial crime. I think that I think the FCA would be a little disappointed by that. And innovation and technology, I think, probably needs a bit more. But let's see.
Would you like to see the results to number 3 now?
Yep.
Okay, let me pull those up for you. There you go. You should be able to see those now.
Okay. Well, yeah. And actually culture has not only overtaken Brexit, but has increased. And I have to say, I think that's where people need to be focusing. It's going to take, it's like an oil tanker. You can't turn culture overnight, but it needs to be done. And there is no doubt that it is going to be driven by the FCA and directed at boards of directors and SINFs. Operational resilience has now taken over from distribution chains and fair value. Interesting. I agree that it is very important. Operational resilience is going to take quite a shift in the way that people think about what they're doing. It's all about the service to customers. I think it is going to be tied into prod. It's going to be tied into culture. And I'm surprised that it has overtaken distribution chains and fair value, because there is going to be such a significant change, I think, to the way that people have to look at what they're doing. And distribution chains and fair value completely tied in with the culture issue. So, all right, quite interesting. So operational resilience here is the second highest. Let's see where people are with their operational resilience. Right, not yet started, fair enough, because consultation papers haven't been done. There are always early adopters, there are always late adopters. Planning, that's good. Okay, I think if a third of you, or just over a third of you are planning, that's good. Formed a team and set the scope, excellent. I think that there may be some scope changes. As I said, I don't think they necessarily need to change the consultation papers, but people now need to really think about whether the scope focuses on that question of culture and resilience and provision of the service, because they are so intertwined now. What are the outcomes of a review of what's happened in the market as a result of COVID-19? So good scope, started mapping, amazing. Got to say, I'm surprised that a quarter of you are already mapping. But that's certainly a good sign for early adoption. All right, thank you very much. Ben, let's have a look now. Questions?
So we've got a number of questions come through already. If anybody else would like to ask a question, please use the chat function to submit that, and we'll come to that as soon as we can. First question I've got for you, Ken. Kenneth, you say you were signposting, and this was a comment made in slide 4 or 5 early on.
Yes.
But the FCA was concerned about referrals as that came at a cost to the consumer. What are your thoughts on this?
It's a very good question. I have to say I haven't given it that much thought. I think the cost of referrals is an issue. If it drives pricing in any way, it is going to be a problem. I think that firms are going to be expected to provide signposting potentially without some sort of referral fee. Okay.
Next question, Kenneth. Does the FCA address culture for businesses and employees working remotely? It was a question asked on slide 7, but also relevant to the communication 20th of March from the FCA.
Sorry, repeat the question.
Does the FCA address culture for businesses and employees working remotely?
Does it address culture for remote working? I think as far as the FCA is concerned, culture is culture for all employees. It's culture for everybody who's working for a firm, whether they are employed or whether they are a consultant at the firm. And I don't think it matters whether you are working from home or working in the office. The approach that firms have taken to support their staff will be taken as evidence of the culture of the firm. So if you're remote working and you have had no support from your managers or no support from senior management in any way, that's a sign of culture. It's a sign of a firm that isn't thinking about its people. So yes, the FCA is thinking about culture of people working remotely.
Next question, Kenneth. Does the FCA have an opinion where we hear firms rely on the intention of the policy wording, which may not be clear in the wording?
Look, okay, so we've all seen in the press the question of firms coming out and saying the intention of the policy was this and the intention of the policy was that. And that's great, but if you're relying on the intention of the policy, which is not a tenet or a requirement of policy interpretation, then you're in the wrong place. And what that might say is that you haven't got your product governance right. You know, a policy is interpreted according to the ordinary meaning of the words. The policy that I was talking about in terms of key man insurance, it was hard to read, you know, and it wasn't easy to find which of the exclusions, and there were more than 15 in the policy wording as opposed to the 15 that I discovered in the policy summary. It wasn't clear which parts of the cover that I would have bought those applied to. And you have to take the ordinary meaning of the policy, not what your intention was. So I think, you know, it goes back to what I was saying. This whole question of the way that the FCA will look at the market is all going to be about its response to customers' concerns. And my example is just a very good reason why the market isn't where it needs to be at the moment. They want policies which are clear. They want customers to get good outcomes, that policies are appropriate for them, meet their demands and needs. And, you know, at the moment in this market, that doesn't appear to have happened in relation to BI. So there's going to be quite a lot of work on not just BI policies, but on how people deal with customers, how people deal with you know, development of their products. And as I said, you know, the FCA wants customers to be at the center of the business model and the behaviors.
Next question, Kenneth, is back to culture. Culture is a huge piece. Do you think you will be addressing culture in ICSR also?
Well, I was, that's a good question. We have a good culture. We communicate regularly. We do what we can to ensure that everybody, you know, knows what's going on. I think culture within the firm is good. I mean, I think we try our best to do what we can in culture. Interesting question.
Next question.
That wasn't you, Ben.
That wasn't me. Next question. Will there be an increased focus on smaller firms in the next 3 years, and in what way?
Undoubtedly. I think that, you know, this pandemic has shown that, you know, there are circumstances where a large number of small firms can be impacted at the same time. I think that it shows that too much of the approach for small firms has not really given thought to their demands and needs necessarily. Yeah, I think SME market is going to be an area. And if that question is actually, just in case I got that wrong, if that question is actually about small regulated firms, then I think the answer is yes. You know, because most of the smaller firms are at the front end of the distribution chain. So they're the people who are actually just, you know, the final point of contact for customers. And if they're getting it as wrong as the people I was talking to about the key man insurance, yeah, there will be a focus on them. You know, because their behaviour, as I was saying, is you know, is capable of impacting not just an individual like myself or my firm, but you know, a much wider group of people. So historically, the thought has been small firms, therefore small impact. But if you aggregate small firms up, you can see now that we are seeing a big impact. Is that the last one?
We've got a couple more questions still.
Okay.
Will the FCA reveal details of any company that has flagged up financial concerns as a result of COVID-19?
No, I wouldn't have thought so. Firms that, you know, communications with regulators, communications between regulated firms and regulators is generally confidential. So they shouldn't be flagging any issues up with the public unless there is a very big concern. So if the firm is going to fall over, then the FCA has an obligation to act, and it would raise the issue at some point, yeah, if that was the case.
Thank you.
No, unless there was a real problem.
Okay, we've still got a few more questions.
Okay.
Next one is on commissions. Do you expect more transparency on commissions in light of the concerns about distribution chains and how it affects pricing?
That's a good question. I don't, I mean, the rules have been around a long time. The FCA, the FSA have had ample opportunity over the years to either require commission disclosure as being mandatory. Will they do something more about it? I don't know. I think they're more concerned about the level of the commissions down the chain and the value that the customer is receiving. I think they're coming at it from a different point of view. They're looking at the manufacturers of products and saying, what are you doing about making sure that the customer is getting value? So I don't know whether, I think the point here is that they don't want customers to be pushing on value, because a customer himself is not going to know whether or not, you know, a 20 or 30% commission it means that they're getting or not getting value. On the other hand, you know, the manufacturers should have a fair idea, because they ultimately know what the net combined ratio will be of the business, or at least if they're an insurer, they will know that. And they will know and should know whether or not, you know, something with a combined ratio of 80% where, you know, 70% of that 80% is commission, is that giving the client fair value? And just in case anybody asks, I don't think that they will set mandatory levels for commission either. I think they'll push it in a different way. And that way is what's the value of the service being provided. Okay.
Thank you. Ben at the MGA has said perhaps just one more question, as we're now slightly over our allotted time. Okay. So I'm going to come back to the subject of operational resilience. Should the approach to operational resilience be one of regulatory compliance, or will the FCA be looking at the underlying substance of a company's operational resilience plans?
Repeat that?
Should the approach to operational resilience be one of regulatory compliance, or will the FCA be looking at the underlying substance of a company's operational resilience plans?
I think regulatory, interesting. I think regulatory compliance can only be achieved by plans which have, you know, substance behind them. If the question is, you know, is this a box ticking exercise? The answer is no. The plans that you have, you are going to have to test and report to board or governance regularly on. You know, and a part of the exercise that will be taking place after, you know, later on from COVID-19 will be to look at and compare how people reacted. Did they pull out their BCP plans? Did they work? Did they not work? And what's the firm's response been to that as a result? Are they now adapting that plan? How does that BCP piece fit into the overall operational resilience work they're doing? It's substance. It's all substance. It has to be something that can be relied on and will work. And we know, you know, we know from this that, you know, I think over the last 6 to 12 months, I don't know how many events have taken place, which were what are called tail events, a 1 in 200-year event. But there've been more than anybody expected, that's for sure. And so what we know is things at the moment that might be on a risk register as a tail event, you know, something way, way out there, which should only happen once every 200 years, are happening more regularly. And consequently, this whole thing about operational resilience shouldn't be thought of as a plan that sits on a shelf. This has got to be something that can be pulled out and will work. So it's substance to me.
Okay, thank you, Kenneth. Ben at the MGAA has asked us to wrap up now. We've got a number of unanswered questions which Ben has advised we will respond to people privately through the MGAA on.
Thanks,
if there's
Ben.
anything you want to, if there's anything you want to summarise to conclude, Kenneth, thank you very much.
Well, yeah, it's look at the big picture. You know, you've got to comply with the rules, but that's not going to get you to where the FCA wants you to be. You've got to look at the big picture, and you've got to be focused on, you know, the service to your customers and the outcomes that they should expect. All right. Thank you very much, everyone. Bye.